Hey, everybody. Chuck Barone here. Welcome to the show. We are live today. Holy crap. It is Monday, February the 26th, 2024. We are glad to be here. I'm real excited to be back. It's been a couple of weeks since I've done a show here, and it's nice to know that we've got some people interested in the show. Your guys' reaction during our hiatus was really exciting. It was nice to see everybody kind of, whoa, was everything okay, Chuck? It was good, but it's good to be back. Now, don't forget, guys, we are live, so you can ask questions live right now and make your comments, make fun of me, whatever it is. It's kind of cool that we can do this. Anyway, so we're going to work out some glitches here. It's our first time going live, and funny that we could not really practice doing live because when you click go live, here we are. There's no chance to practice it, so let's see how it works today. It's going to be fun. Anyway, welcome to the show as always. Thank you guys for tuning in. Let's talk about these markets here a little bit today. Markets turning around at the ends, turning down. I think we're getting a little bit more of a negative sentiment in these stock markets today. The Dow falls 62 points, down 39,069 on the Dow. NASDAQ falls 20, 15,976 on the NASDAQ. S&P down 19, 5,069 on the S&P. It's like, I think that the reality the market's having now, we're not going to have these presto rate cuts that they were factoring in. Matter of fact, I'm of the opinion that if the economy stays where it is now, the chances are we're not going to get any rate cuts this year. So I really think, the whole market sentiment of rate cuts, okay, they did their raising, inflation's coming down. Now we're just going to have rate cuts automatically because they raise rates. It just doesn't work like that in the finance world. The Fed needs a reason to cut rates, i.e., the economy needs rescuing because rate cuts are stimulus. Rate cuts are stimulating to the economy. And if the economy is going good, it doesn't need stimulus. Stimulus is actually inflationary, which they're trying to fight. So we got a little bit of a conundrum. The market's starting to react to that. The bond market's still in a crazy funk, though. You got the 10-year now up 4 basis points. So thank you for that, Jake. The basis up 4 basis points on the 10-year, 4.30%. Wow. Rates are really up since the last time I was here. The 2-year up 3 basis points, 4.72%. Oh, cripe. Numbers are up high, and I don't see them coming down, guys. Rates are going to stay high. It sucks. It is what it is. I think that it changes the dynamic in our society. High rates encourage people to save money, right? You can earn money on your money. You see your money grow faster. It encourages it. Low rates encourage people to borrow money. And I guess with the economy the way they have it set up now, where it's all about consumer spending money, even if it's borrowed money, here we have it, right? So the bond market, the price is coming down, yields continuing to climb. And you look at the supply coming on the market, it's going to be hard to lower rates. Even if the Fed cuts rates, it's going to be hard to get these rates down, 10-year rates. Treasury dumping gigantic amounts of paper on the market. The Treasury rates, okay, let's see. Treasury flooding the markets. Debt just this month, corporate debt expected to rise $153 billion in February. That doesn't include what the treasuries did. The last auction was not good, driving rates higher. The demand is, there's just only so much demand for bonds. And, I think they've found their saturation point, so bonds are going to be tough for a while. The dollar today holding steady pretty much right where it was where I last time did this show, 103.78 on the index. A good solid number for the dollar. Not much to talk about there. Gold and silver, kind of just, again, they're right where they were when I left too. Silver falling 41 cents today, $22.60, pretty much right where it was. Gold falling $4.10 today, $2,032.20. So guess what? Nothing happening with gold and silver, nothing happening with the dollar. That makes sense, right? Oil today, a little bit of a bounce, up $1.10 per barrel, 77.59 for a barrel of West Texas Intermediate. In my mind, that's a little bit high. I think we'll see oil. It wants to be between 70 and 75. I've been emphasizing it for a long time. It kind of broke out a little bit. I'm telling you guys, mark it down. It's going right back into that trough where it always wants to be. I'm trying to do the report and read this. It's going to take me a little bit of time to get used to the groove of all the timing of all of this stuff. But it's nice to see you guys on here talking. Now let's talk about Nvidia. It's the mania right now. People don't even know what they're buying or why they're buying it. It's AI. They know that's the market. They know that's hot. They know that's the future. That's why Nvidia is like up to the moon. And let me say this. If they can make that chip, the AI chip, earn money, well, the stock will probably be worth that price, right? Did you see Bitcoin? I haven't looked at Bitcoin for about 2 weeks. Up $2,722 today, 54,442. $54,000 Bitcoin. I'm telling you, watch and see, guys. I don't know what the all-time record was. I think around 68 grand or 69,000. You're going to see that again. Bitcoin's just going to keep going up. There's a market for it now. The ETFs have legitimized it. Going to see it. Going to see it keep going up, man. All right. So like I do on Mondays, I still want to keep this part of it in here just to talk about the data we're going to get this week, stuff you guys need to know because this stuff could change markets, right? Today, we're going to get new housing sales. I have not seen the report yet. Is expected to be up 680,000 annually, up from 664. So not a big change. Tomorrow, we'll get short selling. Short sellers been getting killed in this market, but maybe it's their time for revenge now. We'll also get durable goods orders, which talks about manufacturing. It's going to be a bad report. They're saying down 5% last month from flat the month previously. On Wednesday, we'll get GDP numbers. Fourth quarter expected to be up 3.3%. It sounds a little optimistic. I don't know if we're going to get 3.3%, but let's see. The big one, Wednesday we'll also get mortgage broker stuff about real estate. I'm telling you guys how terrible it is. Expected to be down 11% again this month, and that's down 10% the previous month. Attila, my man, thank you. I tell you guys, real estate's in the tank, and until rates come down or prices come down, it's going to stay there. No motive to sell, not very much on this market to sell right now. That's why new home sales are higher, existing home sales in the crapper. Thursday's the big day, guys. Thursday, we're going to get PCE numbers. That's the Fed's preferred gauge. We saw CPI and PPI both jump. Listen to this. They're expecting the PCE index to come in up 0.4% month over month. That now is almost to a 5% inflation rate. I don't see the Fed coming and cutting rates with PCE spiking like that. So this whole idea of a March cut, we talked about it before. There's not a chance in hell they're getting a cut in March. And I think we can kind of move it now where if they're going to get one, it's likely going to be September. Obviously, if there's a crisis in the economy, that could change, right? But barring that, rates are going to stay high, man. They really are. And also on Thursday, we're going to get jobless claims, which are expected to still be solid. They're expecting 206,000. That's up from 201,000 last week. We'll get personal spending numbers. That's expected only to be up 0.1%. So consumers cooling their spending last month. Personal income is expected to be up 0.3%, just like it was last month. So people making more money, and actually for at least 1 month, holy crap, not spending it all and more. And we'll also get the Chicago Purchasing Managers Index, which is expected to be up 47.3, up from 46. And Friday, we'll finish the week with the ISM Manufacturing Index. That one is expected to be up at just fractionally 49.3 on the index, up from 49.1. We'll also get the University of Michigan Consumer Sentiment Report, or the Consumer Index Report, expected to be at 79.8, up from 78 78 or 79.6. So that's also expected to be up fractionally. We think that consumers feeling a little more optimistic about their own personal finances, about the economy in general. We'll see how that goes. Election years kind of make everything a little bit curvy, right? So we'll see if that can hold up throughout the entire year. Okay, let me have a see. Do I have any questions here? It doesn't look like it. Nice to see everybody commenting, though. It's kind of cool. Greetings from down under. Nice to have you here, my friend. Thank you. Yep, upcoming dog and pony show for sure. We'll have the Fed yo-yos out talking it up too. Never-ending fun in the markets. But the good news is, guys, the basic stuff we've been talking about on this show. Saving your money. Don't spend every penny you make. Invest it conservatively. Be careful the way you spend your money. Try to stay away from the impulse buys, right? And just do some simple things to take care of your own personal finances, and the machinations of the market just don't really affect you as much, right? The whole frenzy of everything we talk about every day of these markets, they don't really move you so much if you're living within your means and you're saving money every month and investing that money properly. You're going to be doing just fine, regardless of the overall economy, of course, unless you lose your job or something crazy like that. All right, so let's talk about markets today. What's going to happen? I think the Fed is stuck, guys. They're in a big jam, man. The markets want rates lower. Markets expect rates lower. Markets are not going to get rates lower. So how does the Fed cushion that when when the market's expecting those cuts and they're not going to get them? It's going to be fascinating to watch the dialogue the Fed rolls out on this, because they don't want to panic the market. You know how market panics work, man. It goes down 10 times faster than it ever goes up. So the Fed has to be really, really careful. It's going to be fascinating to watch it. They're kind of stuck because they're completely data dependent. Let's face it. They're reading these numbers, and again, I know a lot of you guys are totally skeptical on the numbers, hate the numbers, don't believe the numbers. They are the only numbers we get to work with, guys. And I have my own doubts about a lot of them that we read. But this is what the markets move on. It's just the way the world works, right? I think you got no rate cuts coming. You got the Fed. The economy's still going good until you see big spikes in jobless, until you see corporate earnings really tanking. Another X factor could be this corporate real estate disaster we're going to have any second now, or the commercial real estate. It's the slow-moving avalanche right now, but it's going to pick up steam. We'll see. There's so much uncertainty right now. It's a very difficult time to be the person who can pinpoint one exact stock to buy or one exact sector to be in. It's just tough right now. It really is. Guys are making money because the market's generally going up, but tough to be the stock picker picking that one company that's doing great, unless you were in on Nvidia real early, right? Just a couple other little tidbits before we get this done today. I want to kind of not be babbling as much as I typically do, but just a couple things I want to talk about. Berkshire Hathaway has a lot of people who are big time wealthy people who own stocks and have owned it for a long, long time. Holy crap. Anyway, thank you, Elevate. Way to go, man. Nice. Okay, anyway, so Berkshire creating billionaires like crazy. You know how much one share of Berkshire sells for today? Their Class A stock? One share? $616,810 last I saw. Okay, so if you got two shares of that, guess what? You're 1.2 million plus. Two shares. I know a lot of brokers when I was at Lehman who bought one share of Berkshire just so they could go to the annual meeting every year in Omaha and listen to Warren Buffett and Charlie Munger and all the guys from Berkshire do their thing at their annual. But listen to this. One of the people who was a big stockholder, her husband was Sandy Gottesman, who was a director at Berkshire and one of the big shareholders. He passed away. His widow, of course, inheriting his estate. She just donated $1 billion, $1 billion with a B, to a New York medical school to pay for tuition for medical students who want to study medicine. A lot of these students are going to be able to get their medical degree and become doctors with no debt, no tuition costs, it's just a fantastic thing to do. And it's nice to see some of these wealthy super Brazilianaires actually doing something to contribute to society rather than just buying a new yacht or a new helicopter or a new plane or a new whatever, right? So this is something I wanted to talk about today because we don't see it as much as we should. Somebody donating $1 billion for the good of society. I'm guessing, it's pretty expensive to become a doctor, but pretty expensive or pretty fascinating to see somebody $1 billion will buy a lot of doctors, I'm guessing, right? Another fascinating thing I saw, unbelievable. South Korea, their birth rate is collapsing in South Korea. The average woman produces 0.8 children. They need 2.1 children per woman to keep their population from declining, right? It's happening all over the world. The baby boomers are just shrinking it down, and that's the way it works. But here's a novel idea. South Korean companies offering women money to have babies. Yep. First baby, they give you $22,500. Second baby, they give you another $22,500. Third baby, they give you $30,000. So you have 3 kids, they give you $75,000, not welfare, bonus, just for having kids and helping to contribute to society. Wow. All of a sudden, companies getting a little more altruistic, actually caring about the community and the societies they're living in. That's pretty fascinating stuff, isn't it, guys? Wanted to make a couple of quick announcements. I'm going to ask a favor of all of you guys. I'm asking you guys, take your iPhone, your iPad, your phone, whatever you have, and just make a quick video, send it to us. Just saying, hi, Chuck, we appreciate the show, blah, 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 anything you want to say. And what we're going to try to do, once we can figure out the technology with the live shows now, is we're going to play one of those videos every day to start the show. So one of you guys, every day will be on there. We want to I want to have I see so many of the same names all the time. I would like to have a face to those names. So take us, 30 seconds or less, just to how you doing. We want to make it a little bit more than just hi, because we want to show your videos before our live show. So send us in something, and you can email those videos to our usual address, Ask Chuck Barone, ask, A-S-K, Chuck, C-H-U-C-K, Barone, B-A-R-O-N-E, at gmail.com. Ask Chuck Barone at Gmail. Send in your videos. We're going to create a library of those so people can watch them on our website. We're going to use them to help promote the show. And of course, we're going to make you guys internet famous for a couple of minutes and get you guys on our show. Also, we're going to add a link onto the website. And if you guys want to have a personal consultation, take 5 minutes, 10 minutes, 20 minutes, whatever it takes, to ask me about real estate or to ask me about mortgages and how to get financed, to ask me about savings and how do I save more money, to ask me about investments. Now, investments are going to be a little trickier because I can't give specific investment advice. I'm not a licensed, registered rep anymore. So I can't tell you specific stocks or specific sectors or percentages. I can't do that. I can speak generally about the market and how to invest in it, but I got to make it general. So that will be a little bit more off limits. We can talk about cryptos and what I think will happen there and some other stuff, but we need to keep it legal. So I want to talk, mostly general stuff, but mostly about savings, paying debt, real estate, building real wealth. The stock market's part of that. The bond market's part of that. But that's after you already established the foundation. We're going to get you there, right? We're also going to start creating educational videos. You'll see those coming on. There'll be short videos explaining market terms, explaining some of these acronyms. What the hell does GDP really mean? What does, their friggin' PCE really mean? Talk about basic market knowledge so you guys can, be the smart person at your next cocktail party or your next networking event, right? Anyway, guys, I've been rambling. I appreciate you guys being here today for this live show. It's nice to see so many familiar names, man. I'm not seeing questions, so I can't really answer any of your questions. But don't forget, send your videos, Ask Chuck Barone. We're going to have the Zoom link if you want to sit down, and even if you just want to talk about the Bills. Okay, I'm not talking about your personal or my Bills. I'm talking about the Buffalo Bills. Let's hook it up. I want to get to know you guys. We're going to try to really create more of a community here where we can all move forward together, build real wealth together, have a fun time doing it. That's it for the day, guys. I appreciate your support as always. We really appreciate you tuning into this live show. It's going to be interesting to see some of the statistics on how many people were here. I don't know that right now. Of course, this will now turn into a video that Jake will post. So if you guys want to rewatch some of this stuff or direct some of your friends to watching this video, do that. I know I'm talking a little faster than usual today. Very excited about being live. It's a new experience. It'll take me a few days to get comfortable with it, guys. Bear with me. We appreciate your support. We'll be back tomorrow to bring you the news you need. Until then, guys, take care. Thanks.